The Nasdaq is highly rate sensitive due to its heavy concentration of technology and growth orientated companies, which are valued primarily on their future earnings potential. So when interest rates rise, the higher discount rate reduces the present value of these future earnings, compressing valuations and disproportionately affecting growth stocks. Additionally, many tech companies, they do rely on borrowing to fund innovation, and of course, rising interest rates will increase those borrowing costs, which in turn can squeeze margins. Higher rates also makes fixed income assets more attractive potentially, which sometimes can prompt investors to rotate out of riskier equities like those in the Nasdaq into bond markets. Also, tighter monetary policy often slows economic growth, reducing consumer and enterprise spending, which of course are critical for tech companies. Though these factors, combined with the Nasdaq's inherent volatility, do make it particularly sensitive and volatile to interest rate decisions. Now, the Nasdaq 100 exhibits a pattern of performance around key Fed meetings that can guide expectations for December the 18th Fed meeting. Data from past Fed meetings, you can see here the second day announcement looking at Nasdaq's event feature. You can see that in the 2 days over the last 10 years, there's been a 53.75% winning trade percentage, but an average return that's negative, and some of the maximum falls have been really large. Look, 6.22%. So if there was a disappointment, say that there's an unexpected move of a hold or talk of higher rates, then look at the way that the Nasdaq can really fall, and that's some pretty hefty drops we've seen in the past. And you can see here that on a number of occasions it's almost been edging towards 5%. So there's a lot of volatility here in the Nasdaq 100. There's slightly better dynamics if you just look at the Fed rate cut scenario. So that's a Fed meeting. If you look at the scenario where they've cut rates in the last 10 years, you can still see there's a slightly better bias, and some of the gains have been 2.21% to the upside where they've cut interest rates. And we've seen maximum gains, March 2020, look at 6.46%. The maximum drop has been 4.94, 1.05%. So there are better dynamics, but of course, if we do see an interest rate cut, it's not going to guarantee upside, and of course it's going to depend a lot on the future guidance in terms of monetary policy. And with a standard deviation of 2.97%, there certainly is a lot of volatility around these meetings, and of course the Nasdaq tends to be more volatile anyway. So that's what we're looking at for the Nasdaq 100 to help us get ready in terms of expectations for the interest rate decision. Remember, don't just trade it, season exit. You can sign up here for thousands more seasonal insights that are just waiting to be revealed across countless events and different instruments. There really is a wealth of information here in Season X just waiting to be discovered.